Welcome to the Friday edition of the Wall Street Crossover Show, sponsored by Admiral Markets, and with their market commentator Darren Sinden.
Good afternoon, Zach.
Right, another weekend and another deadline. Is that right?
It is. I mean, it's a bit like being in the film Groundhog Day, isn't it? Only we realise we're in it. Yes, another deadline. Some tweaking supposedly of the Greek proposals to the creditors. Whether it will be good enough to win them over remains to be seen. As you said before we came on air, you're of the opinion that whatever the Greeks say is not going to fly in Germany, and therefore we probably won't see a deal. And my view is that even if we do, how lending them another 53.5 billion euros, which we won't be able to pay back, it solves the situation is anyone's guess. Einstein famously said that the definition of insanity was repeating something continuously and expecting a different result, a different outcome.
This is totally in that bracket, isn't it? Really,
it is.
Well, let's. I'm sure it all will be revealed yet again on Sunday night. Let's look at the data released over the European session.
Yeah, I started with a number that actually came out before the European markets opened, but it was so off kilter that I didn't think we could ignore it. So the Australian home loans for May, so basically the amount of money that's been lent in new mortgages by Australian banks, it fell, the figure month on month, by 6.1%, a very sharp drop, and almost sort of 100% above the forecast, consensus forecast of a drop of 3.5%, and way below the prior month's level of modest growth at 0.7%. Not really sure what the explanation is, and I'm not.
Somebody needs to get back to the drawing board, I think, on the economics front.
Yes, I think that's what
economic calculations.
You could infer from that. I guess we shouldn't judge it too harshly on one number, one figure in isolation, but we should definitely be keeping a very close eye on any other lending numbers from Australia in the next month. And then staying in Asia, one of escaped people's attention that Chinese equities rallied by 5% for a second day. Another healthy round of state intervention seems the most likely reason for that. There were one or two buy calls for Chinese equities from the likes of Merrill Lynch and Fidelity as well, but with many of them still suspended in trading halts, it's hard to see what the real picture is. But nonetheless, the Chinese market's up 10% plus in 2 days. And in terms of a rally in equities, we saw a similar rally, not quite so meaningful, but a similar rally in Europe, rallying on hopes of a Greek deal that we discussed at the top of the programme. And as we said then, what we do know is that the Greeks are asking for a further 53.5 billion euros in financing over 3 years to tide them over. Draw your own conclusions from that. So you know what my views are. And then back to the economic data proper. UK had its balance of trade figures for May. Another feather perhaps in George Osborne's cap, as the number came in at minus 8 billion versus forecasts of minus 9.65 billion. So and the prior read of minus 9.3 billion. So UK exports picking up, and the economy improving, perhaps in line with what Mr. Osborne suggested would be the case in his budget earlier in the week.
He's obviously doing so well.